I honestly believe that the moment I mention this ticker or I mention the company name, I'm going to lose a crap ton of respect and a bunch of you guys are going to leave. But I honestly believe that this company is so undervalued right now, and like it deserves a little bit more attention. And that ticker symbol is ticker symbol GME, GameStop Corporations. Now, before you leave, right, just bear with me and just keep an open mind. I know it used to be a meme stock. I know what you're thinking, but honestly, just stick with me, okay? So let's look at, so currently it's trading at $23.30 as of yesterday, right? Because yesterday, Friday, all hell broke loose in the markets. Anyways, so let's look at the market cap, right? $10.4 billion market cap. I think it was like 10.43, but as of right now, it's $10.4 billion market cap. Now I want to show you their earnings, right? So this is the second quarter earnings. Net sales, $972.2 million in quarter two. So that's just one quarter, right? We also look at net income was $168.6 million in one quarter, right? And we also look at cash on hand is $8.7 billion cash on hand as of the close of second quarter. And they have about $500 million of Bitcoin. And even with the Bitcoin crash on Friday, it's still around $500 million because they bought this. This was recorded in the end of Q2. So like, yeah. So that means that as of right now, GameStop has 8.7 plus 500, we'll round down, $500 million. So that means they have $9.2 billion of cash on hand plus BTC, right? Now again, going back to their market cap of $10.4 billion market cap. That means in total, if they have a $10.4 billion MC market cap minus a $9.2 billion cash on hand, that means that if you just ignore the cash on hand, the company itself, GameStop only, right? Just GameStop alone, minus the bank account that they have, they are being valued at $1.2 billion. Right? $1.2 billion. Is my math correct? $10.4 billion market cap minus their cash on hand plus Bitcoin, which I mean, like that's basically just cash, right? You can convert that whenever you want. $1.2 billion market cap for GameStop, the company. Now I want to go back to their second quarter financials. Net sales of $972.2 million, right? Net income of $168.6 million. If we were to annualize this, because if you will see, if you look at all the other quarter, or if you look at like the trend for the past earnings reports, they are increasing their income. But even if we were to look at this, right? This is crazy. Okay, so let's just round down and annualize this. So let's say instead of $168.6 million, we round down $100 million on average per quarter. So that means that in 1 year, they make $400 million of net income. If we're to annualize this quarter, we round down and then annualize this quarter. And I'm rounding down by a third. I'm rounding down by like more than 33%. So $100 million, multiply that by $400 million of net income per year. Now we go back here. If you have $400 million, look at this PE ratio. Look at this PE ratio. You're worth 1.2 million, and in 3 years, you will earn more income than your company is currently worth. Is that not crazy? Okay, so now you might be thinking, well, GameStop, aren't they the hardware store that sells like physical video games? Who even still uses Xboxes and Switches and PS2 or PlayStations and stuff like that? Well, first of all, the new generation Switch just dropped, right? So we have another console cycle that's going to appear, but I'm not even going to talk about the consoles, right? Because that's not even their main, like that's not even the business that GameStop is focusing on. They're now focusing on more on collectibles. So if you look here somewhere, right, they're focusing more on collectibles. So that would be things like Pokemon cards, Yu-Gi-Oh cards, sports cards like basketball cards or baseball cards, those sets of things. And I think that one of the biggest things that we really have to account for is this GameStop Power Packs. Like, this offers so much value for both GameStop and its customers. It seems like, oh, it's just them opening cards for you. But I think that this has the potential to basically just replace what a lot of people are doing in order to basically do investing in collectibles. Because even on Reddit, you have this Poke investing. I think they have a Poke investing Reddit where all the, like, you have all these people. Look, okay, so where's it saying the number of members? Well, it doesn't matter. 456,000 weekly visitors. I don't know where the order. What does it say? The members. Whatever. Does I can't find it. But whatever. There's a bunch of people that are investing in Pokemon cards and alternative assets, right? And Pokemon cards is one of those things. But so in this case, well, let's just compare this to the expected value of if you were to, instead of using power packs, you would just try to invest in Pokemon card packs alone, and you open the packs themselves to see whether or not you can get your money's worth, right? Because it kind of is a gamble when you're opening these collectible packs, right? I don't care if they're Labubus, if they're Pokemon cards, Yu-Gi-Oh cards, whatever else other type of collectible there is. This person compiled a list of your return on investment if you were to buy cards and try to actually open them. Expected value for all these cards, right? So you just look at the rate on return, right? So like 70%, 50%, 51%. So all these are like at most 70%. This is the best thing. This is the best thing here, right? And this is probably super expensive if you were to buy it outright. So your expected value is this, and your rate of return is basically 70%. But I want you to keep in mind something very important. So let's say you have a 9 card pack, right? So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, right? Of these 9 cards, you'll only get 1 or maybe 2 cards that are actually worth more than, let's say, $3 if you're lucky, right? So let's say these 2 cards are worth or have a chance. So these 2 cards, you have some chance of $3 plus, right? So this is where most of your money goes to. This, on the other hand, all these are probably going to be worth, these will be probably like sub, like $1 or less, right? So sub $1. The problem with this, where is it? The problem with this expected value is that it assumes that you're going to sell all these cards, but these cards are worth, let's say, like 25 cents. It's worth like, I don't know, 57 cents. It's worth maybe like 89 cents, or like maybe even, okay, maybe it's worth like $1.15, right? But on the grand, like, if you've ever collected these collectibles, no one even cares about these cards. No one even cares about those cards. No one bothers to resell it because the return is so low for the amount of work that you have to do, right? You have to actually find a buyer. You have to actually whatever, right? The return on this is negligible enough where people don't even care about it. So you have this return on investment of it saying, okay, your expected value is $3.59, but it's actually even less than that. So it's maybe like, because you're not actually selling these cards, right? So I keep clicking that button. Where is it? Yeah. So this is maybe even less. So maybe instead of 70%, now we go down to, let's say, we'll say 60%, right? Because you lose a few extra cents. You lose like a few tens of cents here in the expected value. So return on investment is only probably going to be like 60%, if not less. And that's for the high pack, right? You have these other ones, 16%, 21%, 32%, less than 40%, less than 50%, right? Even for the best return, you're still lowering this to 60%. But wait, there's more. Sales tax. You're not paying $519. You're paying more than that. You're paying, if you're in California, like $570 for this pack. You're not paying, so that decreases the return on investment even more, right? To now, instead of 60%, now we're at, like, let's say 55%, because you have to you have to account for tax. But wait, there's even more, right? So in this pokey investing thing, right? Let me just go here. There's this thing called PSA graded stuff, where it's actually like you send the card to an actual grader in which this PSA company, the card grading company, is actually working with GameStop, where people, like members or I guess customers of GameStop, can grade their cards by sending them to GameStop, and then GameStop works with PSA in order to help grade their cards. But that also costs money, that also costs time, and like it's just so much more of a hassle. But if you get let's say you get a hit, right? Let's say back in this example, fine. Okay, so let's say back in the example where you have 2 cards that hit, right? So this is worth $3 plus, right? So these cards were your hits. But even if you get a good card, if you have a crappy quality, misalignment, I don't know, it was too hot the day, it was too hot, and then like your hands are sweaty, and then you wet the card, right? You go from a PSA 10, which in the case of like really rare cards could be like, let's say $10,000, right? And then you drop that, and then all of a sudden it drops to a PSA 8. Or even worse, like you get like a PSA, I don't know, like a 4. Okay, probably not 4, but maybe like a 6, right? That $10,000 instantly becomes maybe like $2,000. Or like even like maybe even like $900, right? So whether or not your card is PSA graded high enough, like a PSA 9, 10, 8, that adds or subtracts a lot of value from the card. So accounting for the fact that you might get screwed over by just PSA grading, this 55% that we calculated earlier is now maybe even only 50%, right? So your expected value of your expected return is now only 50% of what you paid. Now let's go back to GameStop Power Packs and why I think that this offers so much value for both the company GameStop and as well as the company's customers. So first off, these cards are all PSA graded. They're all PSA graded. So like you just completely eliminate the fact that you have to pay for PSA grading. You have to spend time, you have to spend effort, you have to worry about it getting lost in the mail and everything. All these cards are already PSA graded. Next thing, let's talk about tax. This coolest thing is all these cards are currently stored in Delaware. And then if you were to open a pack, then what happens is they just keep it in that Delaware storage facility, which is like weather controlled, air temperature controlled and everything. They keep it in that facility unless you actually want it to come home, unless you actually wanted to bring it back or like mailed or shipped back to your house. That means because it's not going directly to you, it's not going directly to another state, because Delaware doesn't have sales tax. You don't have to pay sales tax. You don't have to pay use tax because it is not shipped to you, right? So that's another another thing you don't have to account for. You don't have to account for the tax that you would pay on this price per pack because there's no sales tax here. That's already such a good benefit. Then if you're like, okay, I want to sell it on eBay. You can sell it directly on eBay as soon as you buy here, and then GameStop will help you ship it to the eBay purchaser or whatever. Or GameStop will even buy it back from you for 10% off the market price. So two things with it. So GameStop says that they will be willing to buy it off of you for 90% of the actual market value if you decide to sell it back to GameStop. So two things, right? One, GameStop gets basically if you were to sell it back to GameStop, GameStop gets a 10% markdown, and then they can just keep this card in the pool where users can then where it can basically just generate more money because it's still a chase card, and then more users will continue using or opening these packs. But the biggest thing is, the biggest elephant in the room is, okay, well, I mean, this return on investment doesn't account for all the things you talked about, and you still get a 70% return on investment, right? Expected return on investment is only 7%. Well, what about GameStop? Where is this? GameStop. Let's look at the average card value is $25. Silver, average card value is $50, costs $50. Gold costs $100. Average card value is $100. Platinum, $500. Average card value is $500. Diamond, $1,000. Average card value is $1,000. Your expected return on investment is literally what you put in. It's literally what you put in, because that's how you calculate expected return on investment, right? It's basically just, if you do this enough times, you will get, like in law of large numbers, you will get exactly what you got, or exactly what you paid for. But how GameStop wins is, one, there's a crap ton of ways how this thing alone, I'm just so bullish on GameStop because of this alone, right? Just especially because of the current environment of alternative investments. There's all these people, I don't know if you've seen like the TikTok videos and the YouTube videos of all those like all those scalpers just buying a crap ton of Pokemon cards and everything. This current environment is like, it's so good for GameStop to actually put this out. But what was I even going to say? Hold up. Right. The user doesn't have to pay for tax. They know their expected value is going to be higher than if they were to just open packs. They don't have to deal with actually grading the card and worrying that the PSA would be lower than they actually thought it would be, and then hence losing on that expected value. I don't like this offers so much value for both the customer and GameStop, because also, as I said before, GameStop is willing to pay you back for 90% of the market value. It's here somewhere, but you can sell back what you pull to GameStop for 90% of the value, which means two things. One, GameStop is actually, like, the prices that GameStop puts on these cards aren't just inflated to oblivion, because otherwise, why would GameStop pay you back 90% of that card's value, of what they state is that card's value? So the user or the customer knows that they're not actually getting shafted by whoever's like, might be like faking all the card prices, right? Because they're willing to pay you back a significant amount of that faked card price. So you don't have to deal with this stuff. You don't have to deal with fake people like putting fake prices on cards, and you don't have to pay for taxes. That's crazy. I don't know. Okay, more things, right? These are all kept in a vault somewhere in Delaware. They're all temperature controlled. What does that mean? GameStop can just keep, first of all, they can keep recycling these, because if they sell it back, then this card goes back down the pool. But think about how much theft happens in retail. If they're all stuck in a vault, all their valuable cards are stuck in a vault, you don't get that theft. Another thing, these things, it's not like clothes or food or like kitchen appliances or like TVs or whatever. These things actually appreciate in value. Imagine that you're just holding on to appreciating assets while also kind of selling it and recycling them. In the same time, you're also getting a 10%. You're also getting you're getting 10% return, like not return on investment, 10% like yield every so often whenever someone purchases this pack and then sells it back to you, right? Because think about it. If the average card value is exactly how much you pay, in the grand, like over time, neither the customer nor GameStop loses, right? Law of large numbers. But GameStop also wins when that customer decides, I'll take the hit, I'll sell it back to you for 90% of the price. I'll take the hit, but I just want that 90% of the 90% of the card value, and then I can do whatever I want. So GameStop, this is a net, like, what is it called? It's a net zero game where no one wins or no one loses, unless the customer is, in this case, what's the word? In this case, like, happy enough, or not happy enough, willing to just give you basically just 10% of the card value back. That's just free money in a vault somewhere. You don't have to worry about theft. You don't have to worry about all this other stuff. It's such good value for both customer and GameStop. Now, there's a few other things, right? Like, I think that, like, I'll just, this entire week, like this entire, today, I guess the span of this weekend, I was just looking into power packs, and I just think that, like, this is such high value. But I showed you earlier, for a company that's worth $1.2 billion, I annualized their last, first of all, I lowered their earnings and then I annualized it. And they'll basically make their entire company's market cap back in 3 years. That's a crazy PE ratio, right? Again, and you compare that to the likes of, let's see, Walmart PE ratio. Let's just look this up. Walmart PE ratio. Okay, I can't find it. PE ratio 38. Costco PE ratio. You know, the big ones. 50. You want to do the smaller ones? Kohl's PE ratio. Okay, fine. That was weird. 8? Is it 8? GameStop is still lower than all of those if you account for the fact that you remove the cash on hand and you only have a $1.2 billion market cap for the company, and they want to be a holding company. They said multiple times that they want to switch to being a holding company. Even right now, they kind of are a holding company. They're just holding cards instead of holding. Yes, it is possible that maybe some, like, I don't know, the turkey is slain, right? There's some Black Swan event. No one buys Pokemon cards at all. Let's say that happens. Let's say this entire business is complete kapooey, right? At that point, no one wants this anymore. They still have $9.2 billion of cash on hand. Even if you just earned interest, the interest on $9.2 billion of cash on hand, let's say 4% interest, I think I calculated, it's still like $400 million of interest, which actually that's probably where they get a bulk of their earnings from. Okay, I think I rambled enough. I really do believe that GameStop is super undervalued, especially after the dip. And I think it hit like 22 something yesterday aftermarket, but I don't know, just look into it. I just feel like this is crazy. It's so undervalued. That's it. This is just me rambling for 23 minutes and 7 seconds. Bye.